Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar has let go of its fears, stock indices have taken a step back, gold risks losing a vital trump card, and good news is not helping Bitcoin. The US dollar has shaken off its fears and is back on the offensive. The Fed remains data dependent, meaning a 50 base point rate cut in September and a total of 150 to 175 base point cuts over the cycle is far from guaranteed. U.S. Treasury Secretary Scott Bessent noted these figures as possible outcomes based on economic models, but stressed that he was not directing the Fed to act. Meanwhile, foreign investors are reducing their hedging against risks tied to U.S. assets, while global demand for U.S. Treasuries remains strong. The big question now, is the USD index oversold? Ahead of Jerome Powell's speech in Jackson Hole, speculators were unwinding their short positions on the American currency, resulting in a pullback in the USD index. Donald Trump was able to stop it for a while. The U.S. president called on FOMC member Lisa Cook to resign for alleged mortgage fraud. He still intends to fill the committee with his own people, turn the central bank into a puppet, and aggressively lower rates. The erosion of confidence in the Fed is a bearish factor for the dollar. When your name is NVIDIA, you can move the entire U.S. stock market. The S&P 500's pullback started with its shares sliding, and only afterwards did the other tech giants follow suit. Their shares are trading at 29.6 times expected earnings. This is slightly lower than the price-to-earnings ratio of 31 at the end of July. However, the revaluation is evident. Market veterans remember well the dot-com crisis. In the 1990s, there was also extremely low volatility. The Fed's willingness to throw the economy a lifeline in the form of lower interest rates and an inflated fundamental valuation of stocks. All this resulted in a collapse of the broad stock index. In fact, investors are diversifying their portfolios. When the S&P 500 fell due to NVIDIA, 350 stocks closed the day in the green. When the rest of the tech giants collapsed, 7 out of 11 sectors were in positive territory. The crowd buy the dips, backed by the still strong economy, the Fed's willingness to ease monetary policy, and strong corporate earnings. 82% of reporting companies exceeded forecasts in the second quarter. This is the highest figure in 4 years. The hope that gold will benefit from aggressive cuts in the Fed's federal funds rate, the associated decline in Treasury bond yields, and the weakening of the US dollar have not yet materialized. The Fed is likely to ease monetary policy in September. However, it may then pause again. Its slowness is bringing investors' interest back to the greenback. Clouds are gathering over the precious metal due to Donald Trump's efforts to end the armed conflict in Ukraine. The start of hostilities, followed by the West's freezing of Russia's gold and Forex reserves, marked the starting point for the gold rally. Since February 2022, gold has climbed 1.7 times, reaching record highs above $3,500 per ounce in April. The rally was driven by de-dollarization, active buying of bullion by central banks, and increased demand for ETFs. In the second quarter, central bank activity in the precious metals market declined significantly, and capital flows into specialized exchange-traded funds slowed. Without these advantages, gold can forget about a recovery in the upward trend. However, the favorable external background of monetary stimulus from the Fed, lower Treasury yields, and a weaker US dollar in the medium term will give gold a boost. Bitcoin is under pressure due to the White House's lack of intention to build up strategic reserves in cryptocurrency and the fall in the shares of technology giants. The put-call options ratio for Bitcoin on the Deribit Derivatives Exchange jumped to 1.33. The largest open interest is concentrated near the 110,000 level. Traders fear Jerome Powell's hawkish comments in Jackson Hole and are hedging against the risk of a further pullback in digital assets. The bulls on Bitcoin are not helped by the news of Wyoming's issuance of stablecoins to offer instant transactions and lower fees for consumers and businesses. U.S. Treasury bonds will back the Frontier stable token. FOMC member Michelle Bowman argues that it is time to introduce artificial intelligence and cryptocurrency into the banking system. Otherwise, it risks becoming less relevant to Americans. The main economic calendar events for the last week of August will be the release of data on U.S. GDP for the second quarter, the Personal Consumption Expenditure Index, and the trade balance for July. investors will be interested in the minutes of the last meeting of the European Central Bank and the preliminary estimate of inflation in Germany. GDP estimates will also be published for Canada and Switzerland, while consumer price data will be published for Japan. According to Goldman Sachs estimates, the end of the Russia-Ukraine conflict will result in a 2.5% strengthening of the euro against the US dollar. The Eurozone economy, which has been affected by geopolitics and the energy crisis, will receive a new impetus for growth. Its outperformance of US GDP in 2026, thanks in part to Germany's fiscal stimulus, will create a solid foundation for an upward trend in Euro-USD. Markets will be digesting Jerome Powell's speech in Jackson Hole. It will certainly seem insufficiently dovish to Donald Trump. So don't be surprised if the president launches yet another offensive against the Fed. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.